Afternoon, everyone. This is Stefan Jurians for Markets Never Lie. I just want to take you through how you can trade gold in the global markets. Now, there are many different ways you can trade it. I'm going to show you three different ways today how we can trade spot gold. Now, this is a live gold price trading right now. Just looking at the monthly chart of gold, we can see that we've clearly broken this sort of support area back here in the beginning of 2012 and then took a massive dip. So we are now consolidating from a monthly standpoint of view from about 1450 to about 1200. Okay, so that's the range. So now we're not in this, you could classify this as some sort of Davos box. We don't know where exactly gold is going to trade because sometimes it trades on news, whether it's issues, geopolitical issues like we had with Syria, or it's QE liquidation issues or European bank issues. Um, there are various news items out there, but the main thing that you should focus on, like any market, is price action. And we want to see how this what the ranges are in the current context. Now, let's just look at this from a weekly standpoint of view. As you can see, we got heavy resistance here. This is the 200 weekly average with support. So again, a closer look at gold will show you that the levels are somewhere between this 1450 to 1200. Now, we don't know whether we're going to break to the upside or we're going to break down to the low side below this 1200. Given the trend in gold, it seems, and the weakness clearly seen here, it looks like we are going to break lower. But you know, we don't want to predict, but we anticipate in order to execute a trade. So I'm always looking to be a seller here, the top end of the range, accumulate more of this position, and once it breaks below, accumulate more. So you always want to continue to sell, short sell gold if you're looking at the trend going that way, and add to winning positions. Now, if gold happens to break above this 1500 mark, I'll probably be out of the trade. Okay, now let's look at three different ways you can trade gold. First of all, you can trade the futures contract in gold. Now, let me just give you an example. This is the December 13 futures contract, currently trading at 13.2. If you wanted to put in an order to trade this, just to give you an example, say gold is trading right now at 1300. All right, so your now futures trading is highly leveraged, and I'd only recommend professionals or people who understand leverage and margin trading to get into this, because all you need is around 8,000 or close to 9,000 USD for margin, and the broker will lend you, or not, the futures contract equals to 130,000. So just think about it in that, the type of leverage you get. You put in 9,000 US and you get 130,000. Now, if my target for gold, let's say, is $1,000, so say I execute an order at 1300 and it goes to 1,000. I have just essentially made $30,000 with that trade. Now, obviously, this can go the other way. What if gold goes to 1,500? You know, I've lost 20,000 because I'm shorting gold at 130,000, and I would have made a $20,000 loss. So when you're trading gold, you need, in the futures arena, you need to have a minimum account size of, I would say, about 100,000 US. Do not trade gold futures if you don't have this account. I'd like to start talking about other markets as well, but I thought today I'll just talk about gold. Now, if you're a smaller trader, you can trade the gold CFD. Now, a CFD is a contract for difference. It is basically designed in relation to the futures market, and therefore it gives smaller traders an opportunity to capitalize or lose money on depending on where the gold moves. Now, a CFD order, for example, if we place the same order, let's say this is a December 13, the exact same thing at 1300, and the most amount I can buy is 10 ounces of gold. Now, this is, I only need $2,600 in my account, and I will get gold exposure of gold for 13,000 US. So significant difference. There's a 10 time leverage difference here between the CFD contract and the futures contract, which is the actual contract. Now this CFDs are usually controlled by the brokerages, and you have to be careful when trading, because the brokers know where you keep your orders, where you keep your stop loss orders. So you have to be careful when trading these contracts, because sometimes they come purposely and hit your order just to get you out of the market. So I'd strongly advise people against this, because there is a lot of dodginess going on with these certain brokers. Anyway, one more way to trade gold is through an ETF called the GLD. Now the GLD is designed also to mimic the futures market, and there are a lot of hedge funds who trade in the GLD as well as hedge their positions, or probably have long positions or short positions in the futures market. Now as you can see here, GLD is also because it's 145, so it's basically 145 to around 113. It's a slight difference between the futures and this, but it's pretty much the exact same thing. It's more liquid, it's more transparent. There's less chance of people, brokers taking advantage of you. Now, if you wanted to trade this as it goes a stock trade, say you wanted to buy 100 ounces or 100 shares of gold at say 130, this will give you exposure to about 13,000 USD worth of gold. So if gold suddenly moves and you're buying gold, let's say you put a buy price and it goes to 140, you can make a grand. So just giving you an idea of what is available out there. I understand there are certain people who do not believe that Sri Lankans have access, but believe me, there is access even at Saxo Capital Markets for Sri Lankan citizens and many other brokerages globally. Yes, there are certain brokerages that do not accept Sri Lankan accounts, but that's fine. So you just have to look for the correct brokerage. Now, I'm telling you this because gold is a global product, it's a global trade, and it's a way that you can diversify your assets. And the beauty of it is you just don't need to buy it, you can short it, you can hedge it, and you can do many things with it. I'll be going through silver, corn, wheat, and oil markets, WTI and Brent over the coming weeks, just to give you an idea of what can be done in the global setting. I hope this was clear. If anyone has any questions, please do feel free to contact me at stefan@marketsneverlie.com, or give me a buzz or shoot me a text, and I'll be happy to answer your questions. Thank you.